remember thinking like, wow, actually, like this is really difficult. Like for the normal person that wants to just have an easy experience, like crypto has always built for the crypto user, so it's quite difficult. And I remember that being the first moment where it really clicked in my mind that this is not going to be the way we onboard millions of people into the industry at large.
Before we dive into the show, I want to share a bit about Altitude. Altitude is a global business account built on stablecoins, but fully connected to traditional fiat workflows. You get local banking details, international transfers, corporate cards, and free on and off ramps. For CFOs, stablecoins made payments faster, but slowed down everything else. Altitude changes this with invoicing, bill pay, 5% APY, and accounting integrations, all tied to your stablecoin treasury. I first met the team behind Altitude in 2021, and they were working on their first product, Squads Multisig. Fast forward to today, and Squads has become the default multisig on Solana, securing over $15 billion of value for over 450 teams. The team has brought the same level of rigor and thoughtfulness to Altitude, and I encourage all listeners to check it out. You can learn more in our show description below. Se, really appreciate you taking the time and coming on. Yes, just to start, would love to hear sort of your background. We're both from Jersey, but yeah, what was your childhood like, and sort of tell me a bit about yourself.
Yeah, so my childhood was, I think, pretty atypical. I came to New Jersey when I was about 4, was born in Korea, and had divorced parents, and it was one of those things where I had freedom very early on. So kind of was able to, explore my interests, go out, stay out late, from a very early age. And I think as a byproduct of having immigrant parents, you kind of take over a lot of the adult household things early on as well. So I think that shaped my early life pretty tremendously, where it gave me a lot of responsibility, a lot of ownership, just a lot of, direction that I got to follow on my own. Grew up in a relatively, I would say low to middle class household, went to a public school in New Jersey. And then I had the fortune of getting accepted into Yale early. I think it was just something where I didn't really expect to get in. It's kind of like Asian parents are you should apply to all these schools, try it. And in my mind, I was like, okay, well, I'm just going to go to my state school, but I'm going to try it anyway, just to make them happy. Ended up, I think, having, a good draw there, and ended up going there for 4 years studying economics. And I think that was a very life-shaping experience for me, because I think it opened up the world from, a very small town in New Jersey to, hey, there's all these people, they do all these different things in finance and tech and, legal and whatever it might be. And it kind of led me to realize that there's a lot of things that you can do. And that was something that I think was pretty refreshing. So yeah, spent a lot of my early life just kind of trying to figure out what to do. I would say trying to find my own path in a lot of ways.
Yeah.
And then got to college and was able to see that there's a lot of these different ways you can actually just continue about living your life. And I think that shaped a lot of my early experiences.
And going from growing up in Jersey to Yale, what was that adjustment like? Because obviously you mentioned and I've had friends sort of go to these sort of Ivy League schools. The demographics are very different. Who you're surrounded by is very different, and definitely pretty different. But what was that like?
Yeah, so my high school was about 40% Korean, 40% Hispanic, and then maybe 10%, I would say, other minorities, and then maybe 10% predominantly white. And then when I got to Yale, it was 80-20, right? It completely changed the way I just viewed, I think, people generally. So, the biggest contrast, I think, was, when we were younger, we used to scrape together quarters or dollars to try to get a pie of pizza together. And then you go to school and it's oh, turns out, this is the son of the Pizza Hut guy, or this is, the guy who runs Shake Shack, or, one of these branches that you typically would try to kind of enjoy as a kid. So very different experience, but yeah, it was definitely interesting to kind of come in as an 18-year-old and see there's an entirely different world out there.
And did you grow up with siblings? You mentioned you had a lot of sort of ownership, responsibility from a young age. Were you the oldest, or?
Yeah, no, I'm an only child, but my little cousin, who's maybe 6 months younger than me, so maybe he's not that little, he was like a younger brother to me. So we would kind of venture off into the world, and our grandparents raised us mostly as our parents were working. So it was almost like having a little brother, but not kind of officially.
Got it. And I know this is a long time ago, sort of, but what do you think sort of Yale saw in you? Because again, these colleges like Yale, they're very hard to get into. Um, they lots of reasons they may accept anyone. It's impossible to maybe really know, but like, did you like stand out in like academics or sports, or was there something sort of specific, or do you think it was just like, hey, like say's the complete package, like he's
No, I mean, I definitely wasn't the top of my, like lowly ranked public school in any way. I did fairly well. I had a good GPA. I did well on the SATs, took all the advanced classes they let me. I think the thing that stood out was I was very well rounded. So I was able to kind of take a lot of leadership roles within my school career. So whether that was, the captain of the basketball team or the track team or, some part of the football team or, the honor society or student council, I just kind of took a lot of ownership to try to take these roles and see if I can improve the experiences there. I think a lot of that stems from my childhood of like having ownership and agency and trying to just, make things a little bit better than they might have been.
got it. No, makes a lot of sense. And uh, did you like? Sounds like you played a lot of sports in high school. Have you continued that sort of like up till now? Like, is that something you still enjoy doing, working
Yeah,
out?
definitely.
Yeah.
I not as competitively. I feel like as you get older, there's like more and more risks to
Yep.
to doing things. Like you
Injuries.
yeah, you get injured and it's like, okay, you can't come into the office for a few months. And I think for us at FOMO, it's a really important time to kind of just be stable. So, I
To
still
be
love to,
locked in.
yeah, exactly. I still like to run. I still like to play basketball, lift. Currently training for high rocks. Yeah, kind of taking a lot more casually than otherwise.
Yeah, no, makes sense. Yeah, it takes up a lot of time, and yeah, injuries are the worst. So I've had my fair share. Okay, I guess yeah, zooming sort of past Yale a little bit. Um, you ended up at dYdX, and I guess before we dive into that experience, like how did you end up there, going from uh, dYdX, great, I imagine, first job in crypto?
Yeah, so funny enough, Paul, who's one of my co-founders now, we've had every job together pretty much. So we both met in a summer internship at Deutsche Bank when we were juniors in college. Became really good friends then, both took a return offer, and he ended up leaving the job about 6 months in to go join dYdX. So I think he was, one of their 15th or 20th employees, the first BD hire after the head of BD. And I think that was a key moment in this development here, where he went there, had a really good time, got a lot of ownership, where you go from being a banking analyst to, effectively talking directly to like the heads of these market making firms almost immediately. And we had a catch up conversation maybe like 6 months or so after that. And he was like, hey, like, this is something that's really fun. I think that you'd really enjoy it. I know you spend a lot of time, thinking about crypto, trading in crypto, and just like in the industry largely. So, if you're interested, we'd love to hire another BD person. And then that went well. That was around February of 2022. So ended up joining as the second BD hire there. And yeah, that was a really pivotal part in my professional career, at least. It was a point where we took about 5 market makers on dYdX at the time to about 150 by the time, 2024, 2025 rolled around. And it was just an interesting experience to go from, banking analyst where like you're changing up colors and fonts on PowerPoints to speaking to like the head of trading at some of the biggest TradFi firms in the world. So I think that allowed me to understand like, hey, like, a lot of the hierarchical stuff that's made up is kind of fake. And there's a lot more even ground and a lot more opportunity to kind of express, where you stand in these commercial relationships. So that was really good. Honestly, like one of the best experiences that I've had in my professional career. Really good team, really good people, really good culture. And I think that shapes a lot of the things that, we do at FOMO today.
So you started off as BD, working closely with Paul. You eventually work on product at dYdX as well. Talk to me a bit about like sort of why you decided to maybe transition into product, sort of what that was like, and yeah, just what it was like.
Yeah, so dYdX, when I joined, didn't actually have a product team. So they had a head of product, and I think that it was mostly just to kind of keep the product side of the house from user feedback and, user journeys somewhat on top of mind. But I think, it was a product that was relatively straightforward. And the product team got built maybe as I was a year and a half into my career at dYdX. And they really wanted somebody to take over the trading team as somebody who's, spent a lot of time trading perps on chain and just like generally using the DeFi ecosystems. I think they felt very comfortable with me just, working with my engineering manager and a team of about 10 engineers to really just build the trading experience out. So for me, I thought it was a really good opportunity to go from BD, where, I have built a really good network, know a lot of people, to building something kind of hands-on.
Sure.
So was responsible for the core trading product for dYdX chain there, where we worked on, the front end, the back end, the protocol, and somewhat, parts of the indexer, depending on cross-functionally if we needed to work with them. So it was a really good experience. It taught me a lot about how to manage timelines, how to prioritize features, how to listen to users, and really kind of be on the ground. I think that's that's the thing that a lot of crypto companies don't do a really good job in, is listening to their users and really being on the ground. So it was definitely shaping.
And how do you get from like 0 to 1 in terms of becoming like good at product? Because like, I think there's probably no right answer, but for you coming in as someone without much product experience, like, did you have like mentorship? Did you have sort of a way to develop yourself, or was it really just like, hey, throwing in the deep end? Here's what I'm responsible for. Here's who I need to talk to, and
Yeah, it was pretty much in the deep end.
Okay.
I think that
because dYdX at that point already had like a lot of like, they had traction, they had volume, they had like a lot of users that you could talk to.
Yeah, definitely.
Yeah.
And I think that helped for sure. I think that, one of the things that we often discuss, and I'm not really sure where I come back to in this, is I think it's hard to teach product sense. I think product sense is one of those things where you use the product, you develop an intuition, and then you constantly kind of reinforce that intuition through, user feedback, or through using different products, or just kind of taking a step back and understanding what this might look like in a bigger picture frame. So I think it was something where because I use the product so much, I had a good product sense. And therefore that kind of, strong-armed all the other things, right? Like, I think product at a crypto company is often very different than what it looks like at Facebook, right? It's not like you need to have all of these like very top level OKRs and KPIs and processes and documentation. It's kind of like, hey, here's the thing we need to build. How do we build it? And is there anything else more important to build? If not, how do we do it? And how do we do it, in half the time? So I think it was just something where I naturally felt at ease. I think that if you, throw me into like a Google or Facebook today, I probably have no idea what the systems they're using, or how they kind of go about things formally. But I think that the best product sense intuition, people can kind of figure it out, and everything else is less important.
And when you say developing a maybe intuitive sense or taste of what product is, and it's like some people have it and maybe some people don't.
Yeah.
Do you think that's something that just comes through like do you think experience helps? It's like, hey, just being a user of not just your platform, but maybe other products around, having like a clear sense of like who the end user is and keeping them in mind. Like, what, if you had to distill it, sort of what taste is, sort of, what do you think it means?
I think it's fueled by curiosity. I was listening to Bill Gurley on a podcast earlier, and he was like, in the world of AI, like, curiosity is going to be the thing that kind of edges out everything. And I think that's true for product sense too, right? Like, you need to naturally be interested in whatever the product is, what it's going to look like tomorrow, what it's going to look like in 10 years, and even to some extent what it looked like in the past. I think there's a lot of people who just refuse to have the curiosity about something, and then are put in situations to develop the product. And I think that's often a mismatch. So yeah, curiosity is definitely the thing that drives it. And I don't necessarily think product sense carries over per industry. I think that you need to have that same curiosity, that same, intention, the same desire to learn more about whatever the underlying is. Yeah. Without that, it's very hard to actually develop product sense.
That makes sense. Yeah, I think there's a lot of like different memes about sort of PMs and what product, sort of building a product is in tech. But yeah, and I'm sure it's different for every industry and company. But yeah, I definitely agree. Like, curiosity is a big common theme for successful PMs. And I guess this is a nice segue into FOMO. So you're at dYdX, you leave in, I believe, 2024, and you start FOMO later in 24. What's the genesis of that? Because in 2024, this is like, there's a lot of crypto trading products already out there, derivatives, spot, trading terminals, all kinds of stuff. Why did you guys decide to build there? Like, what did you see as the opening?
I think there's different perspectives on, or different kind of perspectives that formulated the genesis of FOMO. But essentially, on-chain trading was doing really well. I think there was a lot of coins on ETH mainnet that did quite well, and then Solana Telegram bots, trading terminals, and so on and so forth. And I remember very distinctly, I think this was either late 2023 or early 2024. There was a period of time on chain on Solana where it was hard not to make money. Like, anything you bought was going up. It didn't take, rocket science to try to figure out how to allocate capital. And a lot of people made a lot of money in that time period. Evidently, they might have lost a lot of it afterwards. But I specifically remember I'm sitting in Panera Bread with about six of my hometown friends. And I'm like, hey guys, you need to set a bonk bot. Like you need to go on Telegram, you need to create an account, you need to set up this wallet, and I will send you each money so you can trade. And here are all the resources, here are the people to follow. Here's your Phantom wallet so you can, send money back to your bank account. And I remember doing all of this and it seemed very intuitive to me. And they all looked at me like, you're gonna give me $1,000 to do this, but I'm still not gonna do it. And I was like, well, why? Like, why wouldn't you just do this? Because it's so easy. Like, you guys are, hip in culture, you know what's going on. It should be fairly easy to make money. And I remember at that moment, eventually got them set up. But I remember thinking like, wow, actually, like, this is really difficult. Like, for the normal person that wants to just have an easy experience, like, crypto has always built for the crypto user. So it's quite difficult. And I remember that being the first moment where it really clicked in my mind that this is not going to be the way we onboard millions of people into the industry at large. So that kind of passed, and then left dYdX later that year. This was a time period where I largely just wanted to take time off. Didn't get a chance to for other reasons, but I remember Paul, myself, actually Tommy, and a few other friends. We took a trip to Joshua Tree, and this was just hiking, kind of deplugging, and trying to just like take a step back from what the busy day-to-day life might look like in crypto. And Paul and I were on a walk, and this is right around the time that Moonshot really starts to take off. It's like, wow, like this is actually a really good app. Like I want to show all of my friends this, and I want to, show them that, hey, you can just click this button, buy these coins. You don't have to worry about all the crypto. And then I think that I started to naturally flow down the path of what does that look like for them as a user. And I think the user journey ended often after the first token. So I think what ends up happening for a lot of people on an app like that is they come on, they hear of Moodang, they hear of, Trump, they hear of whatever it might be. They buy the token, they make some money, great, they sell it. But then what do they do after that? They are either going to burn their money buying coins they have never heard of with no context, they're going to withdraw their money, or it's just going to sit there. So we thought, hey, there needs to be a social layer here. There needs to be a way where you don't have to be in 10 Telegram group chats. You don't need to be following 100 people, subscribe to like, 3 paid groups to get a sense of what are people actually thinking and talking about. So we decided this would be something that, we want to start thinking about. This was late 2024. I think within a month, we kind of convinced ourselves that this is what the future of crypto trading has to look like, where you need to be able to have full transparency into what's going on. By this point, people are already bundling, with multi-wallets, people are already doing a lot of, sniping of tokens and a lot of things that were very obscure to the common person. So you can think about this experience where, your friend comes onto the platform, they're really excited to buy this token that they think is going to go up in, cultural relevance. But it turns out, one guy has bought 95% token supply and they don't know how to read a blockchain. So it's hard for them to discern that. So we needed to kind of take all of the information that exists on this transparent blockchain and put it into simple UI so that everybody can understand and have a sense of what's going on.
No, super helpful background. And is that the sort of core end user you see for FOMO today? Like, hey, literally like, hey, your hometown friends or whoever else that has never touched crypto before and usually does not make it past that even first hurdle. And even if they do, they churn very quickly. Like that's remains the core user in your mind today for FOMO? Or
So I think they're one of two core users. I think that often when companies start to build a product, they're not able to directly define what their users are in their mind. So for us, we have two distinct user groups. One is your crypto powered trader who is, trading on chain. They're doing all the volume. They're, in all of the chats. They have all the alpha. They just have a good sense of how to trade. And then the complete other end of that barbell, which is your consumer who has probably never touched crypto before. Right. I think we largely try to ignore most people in the middle. When you build a product, you can't build for everyone. So I think we've made the trade-off that, hey, there's going to be some set of users in between that are not happy with the way we do things, with how simple or advanced the product is. Mm-hmm. And that's something, that we decided to do very early on. I think that at this point, trading terminals were quite good. So in a world where like you just want to execute on speed and be glued to your computer, we're never going to outcompete a trading terminal. Right. But in the case where you want to try to build up a social following, get people on the other end of the barbell interested in what you're doing, and develop to build more of a reputation for yourself fully transparently, then, that's going to be a user group that we very much appeal to. And I think that was really slow. A lot of people are very guarded about, showing what trades they're making, being transparent, and especially the biggest accounts, I think, often have some hesitancy around, you know, being put up to the podium and seeing if they can actually live up to their name.
Yeah.
So it was something where we said, hey, it doesn't matter what your name is. It doesn't matter how many followers you have, how much money you've made. If you don't make money on the platform, you don't appear in the places where, there's a lot of real estate, leaderboard, feed, holders, etc. So we really prioritize people who can transparently make money. And then, that obviously helps the other end of the barbell, the consumers who are looking for information via education, theses, understanding, etc.
Listening to you explain the two user segments, is there some dynamic of like sequentially bringing on one user base at a time? It's like having the sort of large crypto traders, maybe the influencers, gives you the distribution and sort of like the product, the platform to like convince some of these maybe less crypto native folks to come on, or do you see it as like maybe just you go to market in each one distinctly?
Yeah, I think that's the $1 million question. It's like, who do you build for in what order?
Right.
And I think that in our mind, we just had to build the best product and kind of let the market decide themselves.
Yeah.
So it's one of those things where each side is reflexive, but how do you get over the cold start? So it's like if there's a lot more consumers than creators, then you end up in this place where, and I use those terms like consumers meaning like your net new users and your creators meaning your crypto traders. So that's how we view it in this like social graph of FOMO. Okay. I think that the more consumers you have and the less creators you have, it's actually a really good incentive for more creators to come on because now there's, a very big abundance on the supply side, right? On the demand side, sorry. And then vice versa, if there's a lot of traders that are making a lot of money and always doing well, but there's very few
alpha.
Exactly. Yeah. And there's a lot of alpha. So there's a lot more on the other side of that. So I think we view that nature to be very reflexive. And once it got going, it was pretty easy to continue to grow. I think the hardest part was actually getting from, the first 50 daily traders to the first few hundred. Yeah. And I think that that's something that most projects struggle with pretty hard, no matter how well you're connected, no matter, how good of an app you've built. People just don't like to try new things unless there's an incentive in it for them. And we've tried really hard to keep things completely organic because otherwise it's hard to find the PMF in things.
I want to get back to this of how you guys got from like a few hundred to a few thousand, but because I think that's a super interesting story. But before that, I want to just go back a tiny bit to sort of the genesis, which is sort of, okay, so you guys were at Joshua Tree, you had this idea and this great discussion, you and Paul, like what happened in the following weeks/months? Like obviously brought on sort of more people, I'm assuming formed the company, but like talk to me about what that was like.
Yeah, so I think, this was 2024, so it's not today. So obviously it's hard to
remember exactly.
Well, it's hard to use AI in the same ways as two non-technical co-founders. So this was around early November. We decided, okay, let's do this to some extent. And then, it wasn't like we were fully committed to at the moment. I think we were just like, this is something that should be good. How do we kind of get off the ground? And I think a lot of people get stuck in the ideation phase there where they're scared to commit. I think a lot of development of the company was in our ways, like it just happened in a way as it was supposed to be. So the next conversation that we then had was with our now third co-founder, Prashant, who is a technical, and, he was a mobile lead at dYdX. He was a mobile lead over at OpenSea prior to that. And I think at the time he was also shortly removed from dYdX and thinking about how do I build, an app, a mobile app that people want to use. So he was exploring the hyperliquid space and, we had a few conversations, and I think he quickly got very pilled that this was something that can actually touch millions, if not billions of users. So he largely started development, full stack on that. And it was largely solo effort for, a month or so. We had some support from friends on, the finance side, the legal side, design side. But it was still very early on. And he put together a version 1 or 0.1 very, very quickly. So I think that this was like, okay, this was kind of the moment where we said, okay, well, we started to build the app. How do we get more talented people to come and join in this effort? So, we had the fortune of having a lot of friends who were looking for jobs at the time. Some people who were, at companies, some people who were not. And I think we ended up just reaching out to who we thought were the best people we've worked with. I think, there wasn't any job like hiring processes for a very long time, actually. We kind of just went based off of, working experience, how well this person produced, and what kind of person they were. It was very important for us to hire high integrity people, people who were very mission aligned, and yeah, these were people that ultimately ended up taking no pay for 9 months.
So did you have a company formed?
We did have it
Okay,
formed.
you
Yeah,
did.
by this time
They
we
had
had the company
equity.
formed.
Yeah, okay.
Yeah, so they decided to forego pay for the better part of a year.
Oh, wow.
And obviously that means that it's a large commitment, right? This is something that we're taking a big shot on. And we were able to, through that time period, expand our team from the three of us to about 6 or 7. We were able to, use a lot of the resources that we've built out to raise a small angel round in February. We raised from about 140 different angels. We decided not to take any institutional capital. We felt that it was just something that would benefit us more to have a lot of people in our network that can help in various things, whether they were traders or GPs at funds or market makers or operators. So did that and then pretty quickly turned around an app and launched our public beta in May.
I think that's pretty rare, right? Convincing people to maybe work on something without like literally receiving a paycheck, even if that's not why most people join a startup. They join for the upside, they join for the team. Like that still is like something rare, I feel like, just convincing people to join without sort of a monthly paycheck.
Yeah, definitely. And I think that that's a testament to like the culture and the kind of working relationships that we've built at FOMO.
Yeah.
I think it's a very special thing. When I was at dYdX in the early days, it was, some of the best culture I've ever seen, right? It was like everybody's very excited to come to work. Mondays were more exciting than Fridays. And it was something where everybody felt like they were driving towards a similar mission. And I think that that was something we really try to hold on to culturally, where everybody is very valued. We're very mission aligned, and it's fun to come to work. I think there's like the quote, you can't really beat somebody who's having fun.
Right.
That's us every single day, even a year plus into building FOMO. And it was really important for us to be able to like have this opportunity to just like enjoy what we're building, touch every part of the product, and yeah, just continue to exercise that muscle. So I think that went a long way, and the people were very bought in. And I think when you hire an early team, a lot of the reputation kind of speaks for itself. So people like to work with people they trust, that they, find to be smart or able to execute. And I think we were able to gain a lot of momentum very quickly early on, at least on the hiring side. So very fortunate for that.
Doubling down on this sort of thread, I think what are some of the things that you guys were able to do with like having this 6-7 person team kind of right off the bat? Because when a lot of seed teams raise like $1, $2, $3 million, they're at like 6-7 people, they're immediately like, oh, we have like it takes maybe a year to even find those people over time. Like they have to sequentially think about which things are most important to build. And it's just like, that's the most important thing in the early days. You guys almost were able to skip a lot of that and just have a lot of resources. Obviously not infinite, far from it, but like how big of an advantage do you think that was in how things have shaped out?
Yeah, I think it was very important for us to get to market quickly. I think when you build a consumer app, you need to get out the door very fast. You need to validate your thesis or invalidate it, and you need to get user feedback almost immediately. So, we took the approach of how do we build something where we can get this out the door in 2 months? And how do we get to the point where we can just get direct feedback? So feedback loops constantly from our investors, our traders, our consumers, whoever they may be. So I think it was quite an advantage to go to market early, especially in a time where I think we were able to catch some of the on-chain interest that was still there at the time.
Yeah,
I think since
this is like right after Trump coin launched, and
yeah, so this was right around I think like 3 months after Melania coin. We actually had an internal build at the time we were testing for that token, and yeah, things weren't working well. We were like, man, we need to improve on these things. And I think a lot of the tricky part was none of our engineers actually ever touched Solana before. So it was a completely new thing to learn. And now I would say, a lot of them are some of the, I wouldn't say the most technical Solana engineers, but some of the people who actually understand how to work with the blockchain in a way that's very performant and able to index things very properly. So we've come a long way in just a year there. But yeah, getting to market was really important because we needed to get real user feedback and validation about how we were doing things.
So you had this idea in like fall 24, the product launches in spring 25, pretty quick turnaround. And like, what did the initial few months, once you launched the product, look like? Sort of, were there sort of bugs? Were there fixes? I know it took like a few months before volume really picked up, but what were the first few months really about?
Yeah, I think the first few months were making sure that the team and everybody close to the team, friends, family, traders, investors, were very confident that this was a product that, they wanted to use. So it was funny because, at that time we were working in this very small WeWork room that, maybe had 6 desks. We were shoulder to shoulder. And it was some of the most, I would say, fond memories I have of building because we maybe had 20 traders, 30 traders, but it was so fun to open the app and just buy tokens and see each other's profiles and follow on the feed. And I think that that's when we knew that this is just a matter of when, not if, that it would be something that everybody kind of shares a joy in. So obviously a lot of the disadvantage of doing a mobile app instead of going with a web app or a website is that there's a lot more friction to download something and to create an account and then to go use it. So I think this is something that we understood early on. And our philosophy has always been build the best product and people will come. And if people don't come, you haven't built a good enough product. So we just continue to iterate, get feedback, build the product out. And yeah, we just made sure to listen to the user over and over again.
Makes sense. And did you have like specific, like the 20, 30 people you brought on, did you have like specific check-ins with them, or were you just like, hey, let us know if you have any issues? Like, how do you actually solicit the kind of feedback that's helpful? Because a lot of times, again, someone will like send over an app, be like, let me know if you have feedback. And it's like a one-time thing sort of, or maybe they're not like completely honest or whatever. Like, how did you guys sort of over many months continue to iterate from this like core set of early users? Like, were you very intentional about who those people were and like who you listened to and built for?
Yeah. So I think a lot of the way we think about feedback is every feedback is something that's worth hearing. And then you need to kind of peel it back and understand what is user actually asking for. I think it turns out that, as somebody who builds a product, you're a lot more sophisticated in understanding of, what the product looks like and its flaws versus a consumer who you're asking for 60 seconds of their mind share to think about an issue they have and
Their
how to
gut
solve it.
reaction. Yeah.
Exactly. So the gut reaction is always helpful because it helps you understand like what are they really, asking for? What is their real pain point? And often the solution is not the thing they propose.
Sure.
Sometimes it is, sometimes people have really good consumer product feedback, but often it's like you need to really understand what are they really asking for. And we did a lot of that, which was, endless conversations about the smallest things. And I think that's another superpower of our teams is, people might say, okay, it's not worth spending 3 hours deciding what is, the user journey for somebody who signs up. What are the first 3 screens? For us, it was because I think that when you build a consumer app, one that's not just for crypto users, you need to build one that's on par with the best apps in the world, not the best finance app, not the best crypto app, not the best trading app. So we needed every moment to be joyful. And one of the people that I think that we very much respect is Pavel at Telegram. And he often talks about how in Telegram, they micro obsess over the smallest details to bring more joy to the users. So if you kind of take a look at your Telegram screens, like the colors are almost always changing. The way they do their UI updates are very, very subtle. The animations, the way messages disappear, it's all something that they calculate, even if it's a 1% improvement. Because over time, these 1% improvements stack up and the teams that decide to 80/20 everything related to UX kind of fall behind very quickly. So that was really important for us.
And is it fair to say in the early days, like obviously growth numbers always matter, but you were less focused on growing the number of users and more just like, hey, getting the product to a point where it's smooth enough, it's easy enough where we can make maybe focus more of our resources, make a full push on like actually growing the traction that we have. Like, is that kind of sounds like was kind of the strategy almost?
Yeah, definitely.
Okay.
We were always product first. And I think the thing we did a really good job of is never being disheartened when, the users didn't come or when volumes dropped. And I think that we had the fortune of just being very optimistic about what this looked like, right? I think that's often something that comes directly just from the founders, and the early team maybe doesn't always share that optimism, but we were very fortunate for everybody to be extremely bought in. A lot of that comes from the fact that they were using the app every day, and right. A lot of our engineers just didn't really trade on chain. So now they were at this point where they were trading quite frequently on chain, and it's like, okay, well, if the app can make me do this, then like, what can this do for people who are actually interested? And everybody on the team still, dog food's a product pretty frequently. But it was something that gave us a lot of confidence that, hey, this is just a matter of, when people catch on, and we don't have to force the narrative. We don't have to force any, false incentives, and we just need to build a better product every day.
That makes sense. Awesome. So yeah, zooming forward, like you've spent a few months iterating on the product and getting it to a point where sort of you're really happy with like every single, maybe not everything, but like most little, very little sort of things. Um, how did you think about growth from there? And feel free to take this in any direction, because there's like the few maybe moments in the months after that where you can point to growth, but maybe just starting off, how did you guys even think about user acquisition?
I think user acquisition is a tricky subject because often people try to acquire users before they feel like their product is in a good enough state and try to catch up to, the growth at a later time. For us, it was really important that we could build features that allowed users to share with their friends and kind of develop more of a product-led marketing approach. So I would say for the first 6 to 8 months of our company existence, we spent $0 on growth. We didn't think it was worthwhile to run ads or to do UGC or to do any of these things until we felt like the product itself could have some organic virality. So a lot of this came from, I would say, two features. One is the share card. So we spent a lot of time iterating on what this looked like, and we wanted to make sure it was very easy to digest, very simple, and something that if you sent to a friend that has never looked at a P&L card in their life, they can understand what was happening. It had your referral code, it had a link, and we often found that this single share card was something that people would share to their friends, and users would be interested enough to sign up. There would be a 10% off of fees with the referral code. There would be some incentive for them to come try out the product. But I think ultimately we relied a lot on product-led marketing in the beginning. And then a second feature that we really benefit from was Apple Pay. So obviously on-ramping is today still the hardest part of using crypto. It's very high failure rates. It's very hard to use certain methods. It's very hard in certain jurisdictions. I think that we had the fortune of having a very easy to use Apple Pay experience early on. So people were able to come on, buy the tokens quite easily. And I think once you give a good product a try, you're more inclined to stay. It's often, when you look at where do people really drop off in the conversion, it's often right before they have to fund their account, because it's quite a lot of friction to put in your username, your social, your address, do all these things before you can even use the app. So it was a really good experience for us to get them to at least try the app out first and then decide if they want to continue to be a user.
Got it. And so it's like having the on-ramps, having the like social aspect that was, you've obviously continued to add on many other things, but having enough of a built out product where the first impression is really good and it's really smooth already, basically. Makes sense. And there's like a few, I was looking at the sort of charts for FOMO volume before this. There's like a few points where there's been like step function growth. I think like January of like, or not. But is there like a specific one that you maybe remember or want to speak to? I know there's like two or three that maybe you could talk about.
Yeah, I think the most outsized one was the one in the fall of 2025.
Right.
So we were a Solana only app until about September, and we had raised our Series A just being a Solana only app, but we had ambitions to expand to other chains. We think in a world where there's, billions of assets across all these chains, you shouldn't be subjected to one chain or having to move funds across chains to be able to use them. So we often talk about how the technology to build something like FOMO hasn't really existed up until recently, where you have the embedded wallets in Privy, you have all of the pricing providers, you have all the RPCs across chains that support very specific indexing functions. You have, the relays and the solvers of the world. So we created this experience where you could actually have one balance and you could trade both Solana and base coins. So you can go from, a position in WIF on Solana, sell it for cash, and then go buy Clanker on base within 5 seconds. Typically, this would require you to go bridge, which might take 30 to 60 seconds, have two wallets, have gas fees, and, a lot of other complications that I think that we never really shed as an industry. So in FOMO's case, we pay for your gas, we bridge over funds, and we do this all in a manner where you have your coin on the other chain in 3 to 5 seconds. In busier times, it might be longer. And I think when we launched this, our philosophy was, we could think about other product verticals like perps or prediction markets, but not failing to add one of those other products is not going to lead to the death of FOMO. But what will lead to the death of FOMO is if we're not the best spot trading app ever. So we needed to build multi-chain support, and we launched Base. I think it was relatively quiet. People, were starting to migrate over, use different coin or use different chains to trade, and it was relatively quiet. I think that the big moment came when we added a third chain, BNB chain. So what ended up happening with BNB chain was, it was a user request for 2 weeks where we got hounded hundreds of times a day. Hey, please support BNB. This was right around when BNB chain was very, very active on chain.
Was it from like Chinese users?
Yes.
Like Chinese?
No, it was actually all users.
Oh, it was all users?
Because I think the Chinese users were already there via, some of the trading bots and wallets that existed. But most of the world was too lazy to spend 30 seconds to go bridge over to BNB and trade these tokens. So they said, we'd really love for you to support this.
Right.
So we decided, okay, we're going to drop everything we're doing, spend 5 days to support the chain. And then by the time we actually integrated the chain, we kind of caught the tail end of the BNB season. So we ended up, being second or third across all trading apps there, but relatively low volume compared to like the prior weeks. Right. But I think the key moment for adding a third chain was people now realize that you could have one balance and trade across pretty much 99% of the assets that you wanted to trade, whether it was Solana, Base, or BNB. So we had a couple of big traders on board who were kind of tired of rotating between different wallets across different chains. They ended up, trying the experience and really loving it, saying, man, I've never seen something like this in crypto. On top of that, they were trading quite well. So they ended up getting followers. Some of these guys ended up gaining, 5, 10, 15,000 followers in a single week. A lot of these guys ended up getting more followers on FOMO than Twitter. So it was this moment where people understood that the social layer was something that could actually compound as you continue to trade more and more.
And the things you're describing, like having cross-chain capabilities and pre-funding gas and having like easy on-ramps like Apple Pay, in hindsight, it sounds like really obvious things to do. It's like, it's almost hard to believe that wasn't the state of things necessarily. But I think, yeah, to your point, it might not have been possible, especially the cross-chain stuff up until sort of a year or a year and a half ago in a really smooth way. And then, yeah, teams may just not be building for that user. They might be building for like the more sophisticated crypto power user that just is already used to like bridging or whatever. But do you think there's like a specific reason you guys were maybe early to some of these things and maybe, yeah, like just like a timing thing, obviously combination of just sort of internal conviction on these being the necessary ingredients?
Yeah, I think it boils down to the outcome that you get from doing these things is often not worth it because the work is so intensive to do it. So indexing is a really good example of this. Nobody up until, 3-6 months ago really did cross-chain indexing well because it's really difficult. How do you pull balances across every chain that you support, put into one universal balance, and properly track your P&Ls? Even major apps today can't track your lifetime P&L on that token or the current trade token. It just tells you a 24-hour change because it's incredibly cumbersome and difficult to actually index this properly over the course of thousands, hundreds of thousands, millions of tokens. So it was something that I think a lot of people kind of disregarded as something that was important. And I think even today, like people think, why do you need to know how much you're up on this token? It's not something that's important. So you look at a lot of EOA wallets and they'll just tell you 24-hour changes. Another thing is cross-chain trading. I think a lot of people, they spent, I think there were apps that did this, but when we tested them, they took 20, 30 seconds to fill across the chain. And I think that the work needed to improve this experience, both from the solvers front, but also internally, was not something that was well worth it. What is the real difference between 20 seconds and, 5 seconds? I think we took a very opinionated view that every second away from zero is so much more important than the next. So, a 10-second experience is an order of magnitude better than 20. 5 is, an order of magnitude better than 10, et cetera. So I think we were just looking in places that now seem obvious, right, but maybe people didn't think was worth their time, especially as they built other products.
Right. It's like, oh, we can support like perps or prediction markets or some other thing, when in reality, like just supporting like a vanilla implementation of that may be kind of commoditized and sort of decreasing the friction by an order of magnitude. That is actually the big unlock all along. And how did you go about doing that? Like solving some of these indexing challenges, sort of doing cross-chain? Obviously, there's like external providers that you guys worked with. I'm sure some of them were really good. But how much of it was also just like dedicating internal engineering resources to like, did you guys solve these things like first principles, or I'm just curious sort of what that actually looks like?
Yeah, so a lot of our backend engineers came from dYdX, where, as a decentralized perpetuals exchange, performance is really important, latency is really important. So I think they were able to look at it from a different lens that wasn't, is this good enough? But rather it was, how can we make this 10 times faster? So a lot of these things that we kind of did were, I would say they were good out the box, but they weren't great. So there's a lot of things you kind of need to work directly with the team on, whether it's, developing a specific feature or implementing it in a specific way or indexing the transaction on our side in some sort of way or improving the SDK of, the embedded wallet. And I think that we just saw a lot of these like 2 to 3x improvements stack up. And you get to this point where I think today a lot of this is probably already commoditized. Like a lot of the providers themselves have actually decided, okay, we can actually just do this ourselves and you don't need to do the work and it comes out of the box great. But I think that even, 3 months ago, that wasn't the case, 6 months ago, 9 months ago, et cetera. So yeah, a lot of our time was spent trying to hyper optimize user experience. And I think look in places that people really weren't willing to look.
Right. So it's like being ahead of where the market is in terms of user experience, and like that in and of itself was one of the big things that mattered. Yeah, that makes sense. So obviously you touched on like, hey, we had this great big growth moment with adding other chains, Base, Binance. Did you guys do outbound? Like, did you guys reach out to traders, influencers, and like, what was that like? Obviously, I'm sure like you and Paul, having been at dYdX, spent a lot of time talking to traders in the past. That probably helped, as well as your cap table. But just talk to me about some of that outbound.
Yeah, so we probably messaged every single person that has ever traded on chain through, our main account, through our personal accounts, whatever it might be. I think that this was something that didn't really yield much results, to be honest. No matter how many times you ask somebody to try the product, they're not going to try it unless they're willing to. So
Just Twitter DMs.
yeah, just Twitter DMs, Telegram messages, trading chats, like, almost like at the early days, religiously begging people to, hey, try this app out. I'm sure you will like it. We realized none of that worked unless it came from a neutral party. So, a trader friend of yours that you respect telling you to try FOMO is very different than like the co-founder telling you to try FOMO.
Yeah.
So what we realized is that as people really start to enjoy the product, they realize that, hey, this is a joy that I think I want to share in my trading chat. This is something I want to share with, my company, with my friends, my family, whoever it is. So there was a lot of many-to-many marketing led by the product where people just wanted to have other people enjoy this experience alongside them. And I think that that's still today continues to be the biggest biggest driver of growth.
Right.
Even, on a week like, on a day like today, we'll probably see over half our users be referred from somebody else.
So you had users that were using the product just organically share sort of the experience with others, convince them to get on. It's kind of this form of like user-led marketing almost, where your core users are your advocates. They almost are selling the product for you. How much was the sort of ref links part of that? Just like, hey, like look at this amazing product, having the ref link as well. Like there's a shared incentive to do it. I feel like we've seen like everyone tries ref links, right? So that in and of itself is not maybe a differentiator, but combined with like the genuine excitement for the product, maybe that together just like means that it actually works.
Yeah, and I think ref links have been around, since the early days of crypto, right? You see a lot of, centralized exchanges, they spend a lot of their time and budget to actually have ref links on big accounts bios and tweets and et cetera. I think the only way you put a ref link in your bio or share with somebody publicly is you are either paid to do so or you are so proud of the product that you know that it's
You're not
going to
embarrassed.
disappoint. Exactly.
You're not embarrassed to share the ref link.
Exactly.
Yeah.
So
It's not a liability.
exactly. So I think that that's something that a lot of projects in crypto, kind of discount to zero, that you can actually build a product that people want to share. So I can, I say this a lot on Twitter, but we don't pay people to put their ref links in their bios. We don't pay people to talk about FOMO, to post about FOMO. Everything that we pay for is related to sponsorships of podcasts or sponsorships of media, and it's all very transparent. I think that this can't be said about a lot of other companies. And, for us, the greatest joy comes from the fact that a lot of people think we pay people to post these links. We look at some of our favorite traders and they have it in their bio. And maybe some people are saying, hey, those are people that are either advisors or investors, and often they're not. They're people completely unrelated to us. In some cases, we might have never even spoken to them. So it's really cool to see that. I think it's something that really exemplifies that it's a good enough product for people to put their name to. And it's something that actually helps meaningfully onboard other people. And I think when you're a big account, you do want to help others. You want to give them better tooling. You want to give them better access, education. So it's something that we're tremendously proud of. And we get a lot of shit for because people don't believe us. But yeah, it's something that, to this day, we don't pay anybody to do any of those activities.
And you talked about sort of, there are some things you do spend money on from a marketing standpoint, customer acquisition, whether it's like sponsorships or maybe other things. I'm assuming that's for the less like KOLs, big trader, that's more for just like a mainstream audience where they just otherwise wouldn't even know you guys exist. But yeah, talk to me a bit about just what that looks like, how you guys think about it.
Yeah, so I think we view almost all marketing spend to be towards the brand. You need to build a brand. People need to see the brand over and over. People need to see people talking about the product, the UI, the logo, whatever it might be. So a lot of our sponsorships have been towards podcasts that we think are still up and coming and very, very excited about. People that are going to continue to grow and hopefully touch more and more people even outside of crypto. So, this is something that's as easy as putting a logo on the corner of their podcast screen. And we don't really force anybody to say anything or mention anything. You and I were talking about podcasts earlier, and sometimes you listen and there's, a 30-second ad every 15 minutes. It's unfortunate. I think that it's a great thing to have, to the extent that it's like, one or two throughout the episode and it's very informative. But yeah, sometimes you get hounded by these things, and we don't have any SLAs with these people. We don't say you have to talk about us. You don't have to post about us. You don't have to do anything, to be honest. Like, we just want to sponsor this. And the only thing we ask is you put our logo in the corner, and anything related to the product or adjacent is something that you should organically want to talk about. If not, we haven't done a good enough job on our end.
Right. And are there specific categories of users, whether it's with the podcast sponsorships or just other stuff, that you think spend is maybe justified? Like, I imagine there's like a very specific cohorts where you're like, this is worth spending money on. Is it, you touched on like, hey, a lot of it's non-crypto people. But yeah, like who are those? What are those cohorts?
Yeah, I think it's usually consumers who are trying to educate. So often, people don't use a product not because they don't like it, but because they don't know about it. So for us, we only have 400,000 users. There's a lot more people in the world who are interested in trading on-chain assets, and people who would be interested in some of the other products that we end up developing. So for us, it's education. It's all, here's this product you might have been looking for. Here's why it's helpful. Here's how I use it. Here's why you might like it. Here's a product you might want to see and check out if, you always wanted to buy the next Moodang, or you wanted to buy a Doge token, or you wanted to buy XRP easily. These are things that we just want to inform people about, because at the end of the day, you can't force people to do things without, some sort of incentive at least, but you can educate them. You can get them to realize something like this exists. And we like to think that if we can get you to that path, and this is a product that makes sense for you, you will try it and hopefully enjoy it.
So you guys are at a point where you have a bunch of big traders, a bunch of influencers on the platform. You have the overwhelming majority of users are like not those people. It's like, it might be crypto native, but smaller accounts. It might be like non-crypto people that are using you guys as their first and maybe only entry into crypto. How do you balance those two? Because I think you guys are a small team, right? It's like less than 10 people still today. And the power users need like customer service. Like, you have to respond to them. You have to build for them. If they have issues, you have to be really hands-on with them. Like, that's 100%, that's just necessary. And then you also have this enormous long tail of users where, regardless of how amazing or easy or low friction the app is, like, there's always going to be questions and things and features they want. And you obviously can't respond or satisfy to sort of all of them. But like, I could see that being something that's hard, just given these two categories of users, and like, A, having the bandwidth to address all of it, and then B, like knowing what to prioritize. Because again, we touched on this earlier, there's like this supply demand dynamic where you need to satisfy both cohorts. If it gets imbalanced on one side, like if it's just a bunch of people trading independently and there isn't this like social aspect, this influencer aspect, the value of the platform degrades. So yeah, curious how you think about all of that.
Yeah, so we have the fortune of working with people who really care about the issues that the customers are having. And as a result, a lot of the time of the non-technical team is spent, working with our traders, with our consumers, debugging issues. And I think that one of the things that AI has done really well for us is it's created a system where we can actually not bother engineers to understand what went wrong in a transaction or, where in the life cycle the trade is or, what the issue might be. So that's something that's pretty recent, and we're still getting used to exercising that muscle. But now we're able to effectively take what was an entire engineer's time and shrink that by an order of magnitude. So non-technical people on the team can do it. And yeah, even at this stage, like I'm answering, 300 messages a day, every single day. It's the number one priority for me to get done because it's something that is timely. And whether it's Twitter or Telegram through trading chats, like always making sure that people feel heard. I think what ends up happening with a lot of teams is they get to some level of PMF and then they decide to kind of jump to like an ivory tower.
Right. Outsource. Yeah.
Exactly. Or outsource a lot of these things. And it's important for us to feel very connected to the user because it's something that is very important. Like you want to understand what are the frictions, how can you continue to, improve the experience, satisfy them with the issues that they're having. And I think another thing that allows us to really do this is we don't have any product managers. We don't have any people who have to defer to somebody else for a decision on a product. So every single person at the company has strong product sense, and therefore they can autonomously go and fix the issue, go and create the new flow, go and, design and implement. And I think with AI, we're seeing like this interesting experience where we often joke that we no longer have two front engineers, we have four, because our designer and our growth lead often push code directly to staging and then to prod. And it's really incredible. I think that a lot of the world is moving towards a space where being a good prompt engineer is something that actually can meaningfully solve a lot of issues that are happening. And yeah, we're just excited to leverage this technology, but always, understand we need to remain close to the user at all times.
300 a day. That's quite a lot.
Definitely, yeah.
Is it, what kind of stuff? Is it like normal customer service stuff? Is it like feature requests, mix of everything? Like what does this actually look like?
Yeah, so often it will be feedback. And I think everybody's different, right? So feedback looks very different if you're a power user, if you're a normie, if you're, somebody who's looking at crypto for the first time. So it's important to respond to people at the very least and understand that like, hey, I saw your message. I understand you. Here's how we think about it. Here's what we'll action. Here's, how we think about it. Um, I think that these are all things that are really important to us. I think that that number goes up quite a bit when there's outages, whether it's related to an RPC or a pricing issue or even a cross-chain solver. So in those times, it's really just assuring them that, hey, this is something that the team is actively looking on. One of the things that we found quite interesting was one of our advisors was an early senior member at Robinhood, and he was saying that there's kind of two types of customers. There's your consumers, your real retail users, and then your more VIP users. Your consumers or retail users typically they don't really care how long it takes for you to respond to them. Like the difference between an hour and 3 hours is not that meaningful. Right. They just want their, issue solved. But for VIP users, the difference between 5 minutes and 20 minutes is actually an order of magnitude.
Game change, life changing.
Right. So we, whether it's healthy or not, we make sure we are always on top of all of the chats that we have, all of the contact lines, and make sure that we're able to be pretty responsive. So yeah, it's not an easy feat, but it's something that's necessary. And if that's the advantage that we'll have by putting in, the work being on the ground, then we'll continue to compound that.
That makes sense. And given AI, given sort of the things that you've talked about, like we've seen Hyperliquid with a really small core team of, I think there's still less than like 20 people today, scale enormously. Like, do you guys plan on expanding the team? Obviously, like maybe some hires, but like, again, it sounds like the goal is to really keep it lean and focused.
Yeah, definitely lean and focus. And I think this is something that people haven't been able to do as a consumer app before. If you look at something like a Hyperliquid, they, have probably 200,000 users a day, but a lot of those users are sophisticated enough to understand what's going on, and they can kind of focus on building the product and, all of the stuff that comes with it, as opposed to answering emails. Right. It's a little more difficult when your user group on Median is somebody who is generally less informed or might not know what a blockchain is or gas fee or slippage. So it is a tricky thing to balance. We do want to remain lean. I think it's important for people to have a lot of ownership, a lot of autonomy, and ultimately we'll hire great people as they come across. We've never decided, hey, this is a person that is really exceptional, but we can't hire them because we don't have a specific role. We really want to make sure we can hire great people and give them the room to do great things.
To touch on the Series A, you guys raised in the fall, I believe, or early fall. And how did that come together? Obviously, Benchmark is a firm that like great reputation, but typically does not do crypto, or very rarely does. But how did that come about? Like, did they reach out? Did you guys get connected to them? Like, sort of, what did that actually look like?
Yeah, so we had the fortune of having one of our angel investors be somebody that has gone through the process quite a bit. So he kind of gave us a framework for, hey, here's how you should run the process. Here's how you should think about it. Here are the people you should talk to. And even personally made introductions to a lot of the people that we ended up speaking to. One of those parties was Benchmark. And it was one of those conversations that was like, hey, we're both doing, the person a favor by speaking with each other. It's not, something that was top of mind for us. They don't really invest in crypto. We're not really sure how this kind of fits into play. So we took it mostly out of formality. And the funniest part is we were 15 minutes late. It was the only meeting we were late to. And the reason we were late is because we were both on different Zoom links. So you can think about it from, how funny that must have been, where we're both doing, this mutual friend some sort of favor, or not a favor, but we're just like, using his introduction as something that we warmly take to have a conversation. Yeah. And I remember we got off the call and we were like, man, like this was bound to happen. Like one person who didn't show up, right? Yeah. It's okay.
It's like they don't care about crypto.
Yeah. And then on his end, he sends it an email. So it's Chathan. And he's like, hey guys, like I'm on the Zoom link. I know we're like, a few minutes late, or I know we're a few minutes past the hour, but just wondering if you guys are still joining. And as soon as we get off the call, Paul calls me and he's like, dude, get on the other Zoom link. I was like, what other Zoom link? So he sends it over. We get on the call, and Chathan is one of the nicest people I've ever met, not just like, in crypto investing and whatever. He's just a nice person. So positive attitude. He's very like understanding, it happens. What's up? How's it going? We have a conversation for about 15 minutes. And at the end of the conversation, we thought that it was going to be okay. It was great to meet you. Thank you for your time. But he's like, hey, like, would you guys fly to SF Monday? And Paul and I looked at each other. We were like, it'd probably be difficult. And we're not sure why you want us to fly out. But what if we do a virtual meeting instead? So he ended up setting up a meeting with the rest of the GPs at Benchmark. We get onto the Zoom call, and yeah, it was kind of just going back and forth on the product, the decision, how we think about things, why this is important. And it was honestly like one of the best conversations we had, where we thought that a fund that doesn't really look at crypto might not have the nuances to understand and ask the right questions, but they asked all the right questions. They had, a very good enthusiasm about them. And I think that we were just very appreciative of how much time they spent to get to know, the product and the industry. And to give you context of that, we didn't hear from them for a few days, and we sent the message as we are thinking about taking another offer. And we're like, hey, like, we really loved our conversation. Just wanted to see if, you guys were interested, because we really think that you guys are people we'd love to work with. We haven't heard from you in a while. And, we thought the conversation prior went really well. So he ends up sending us a message saying, oh, I'm so sorry we've gone silent. We've just been, messaging everybody we know in crypto. We've been talking to all of our favorite people at the Coinbases, the Robinhoods, the Ethereums, and trying to get a sense of what does this world look like and why have we not been looking at it sooner? So that was something that really Paul and I respected. We were like, okay, these are people who haven't looked at crypto for the better part of, half a decade. They did do a chain analysis deal back in, the late 2010s. They, have some stuff with Ton, but they've largely been focused on AI. So I think we respected they took a lot of time to really, be thoughtful about what this looked like, how we fit into play. And then Chathan actually flew over into New York. We had a lunch actually at JFK, and we came to terms that just made sense. We were really excited to work with him and with the firm, and they really believed in what we were doing. And it's been honestly a great relationship since.
Nice. And I imagine, like, given the focus on building for non-crypto users, in addition to crypto power users, like having a name like Benchmark helps with that.
The thing it really helps with is Chain himself is just a phenomenal thinker. So he's able to, I think, be a devil's advocate in this world of, non-crypto, right? Like, how does this look to the consumer? How do you think about strategy outside of crypto? How do you kind of make sure that you're doing all the things that you might not be thinking about? And that's been tremendously helpful. For the better part of 3 months, we spoke every week, or maybe even like every few days. We wanted to always like understand how do we kind of think about things, and it was always good to get insight from somebody who wasn't staring at the industry very hard for better part of half a decade. So yeah, it was just something that, I think the best is yet to come, where we're still 400,000 people. They've done a lot of tremendous deals that have scaled some of the biggest social media companies in the world. And I think that that'll be knowledge that's incredibly valuable to us and experience that we, fortunately get to tap into.
Makes sense. And is this on these calls, are you chatting about like the product itself, like minutia around specific decisions, around like company building stuff? This is your first company. So it's like, hey, how do we deal with like growing users and scaling the company? Like what kind of, I imagine you talk about all kinds of stuff, but like curious what's, if there's any specifics, maybe. Yeah.
Yeah, I think it almost never touches the product, which I think maybe some companies prefer their VCs are very, very product focused. I think for us, we're very happy. Like we spend every day thinking about the product, every minute. We really are the people who are most plugged into what this should look like and the pain points. So it's often not about the product. It might be about adding new verticals over the course of time, but it's often bigger picture. How do you think about this in the grand scheme of the world, in the evolving view of finance, in crypto, and how do you position yourself to, be in a competitive position at all times?
Right.
So I think it's a little bit different than what you might get from a very crypto native VC. And it's, in our mind, the best way this relationship can operate.
Going back to something you touched on, which is where FOMO goes in the future. Like you guys are obviously spot today with a focus on meme coins and tokens. You don't really touch the large caps. There's things that you've thought about like perps and prediction markets and many other things. And what you mentioned earlier is like, hey, until we know that we've won spot, like that's such a big opportunity that we don't want to lose focus and spend resources on this other stuff. So I guess my question would be like, at what point do you win spot? Like, how do you get there? Do you want to eventually support like large caps and that's like an enormous market? Like, how do you think about that in general?
Yeah, I think the way we think about it kind of at a high level is we need to meet the market where it is.
Yeah.
So a lot of people build this product and they try to will their users into a specific market. And you mentioned meme coins and, culture coins, attention coins, whatever they may be. I think that's just what happens to be popular today. But we do support all the large caps. And I think it's actually the easiest place to trade a Bitcoin or Solana. It's 5 basis points. We cover all the gas, all the priority fees. So we do see a lot more users start to hold more of those positions, right, especially as the app has evolved. But I think at the end of the day, we need to build this infrastructure that doesn't determine what you trade, but just gives you the ability to trade it.
Yeah.
And I don't think we'll quite know when, we feel good enough to move on from spot. But I think at least for the short term, there's a lot of obvious ones in front of us.
Right.
We're working on a web app, which we're incredibly excited to release. I think a lot of the more advanced traders, they typically prefer web, and we appreciate them for coming to our form factor of mobile, but understand that, things are naturally better in their preferred form factor. We have, limit orders, DCA orders. We need to improve cross-chain swaps, indexing across all the chains that we support. We need to add all the other chains that we haven't supported. I think there's so much work in front of us. It's kind of hard to think about when the next product comes.
Yeah.
I think the only thing we do know is that what we want to do at the highest level is take every single technology that has been built in crypto that's worthwhile to use as a user, package it into a really good user experience that makes you feel joyful, and one that abstracts away all the technology. So, one where you can go from depositing via Apple Pay to going to buy Solana, to selling, to go long 100x on Bitcoin, to selling, to go 10x long on silver, to betting on the election, to betting on a sport game, to earning 8% on your yield. Just the best parts of crypto that I think nobody's really done a good job of packaging into one, and creating this experience where you can almost make it feel like it's not even crypto, which it should be. It should just feel like it's powered by something, but you shouldn't have to know you're touching crypto.
Right. So it's like initially the genesis of the company and the early users are really coming for the token trading experience, like that's where the maybe 10x improvement was compared to other options. And then once you like, that's been driving a lot of the growth, but really the vision in 5 years, when you sort of speak internally, when you think about it, it's to like over time, there's going to be different things that people want. And like, not to say that meme coins will go away. I think some form of meme coins will always be around in crypto, but there may be other things that drive a lot of growth and provide opportunities for you guys. And in 5 years, like the goal is to have a lot of that essentially.
Yeah, definitely. Hopefully all of it. I think the way we think about it is we want you to be able to speculate on anything in the world and do it very easily. Do it in a way that's very simple UX. Do it in a way where it's visible, where you can adopt it into your social identity. Right. And you should be able to carry this social identity across any product, any asset, any type of feature that you are interested in using.
Makes sense. One thing you've written about is this sort of social graph to speculation graph era. Like if anyone doesn't know what I'm talking about, Say wrote a great blog post a few weeks ago. Do you want to give like a quick maybe summary of what that idea is?
Yeah. So essentially, I think social media has taken a lot of different form factors since, the invention of Facebook back in the early 2000s. And, even prior to that, MySpace and Six Friends and or whatever it was called and all these other platforms. But I think social media, when it first started, it was still something that was like relatively early in the internet days. And it was something where you used to connect with people that you knew. So this was something where the only thing that mattered was, can I connect with, my cousin from a few states away? Can I connect with my mom while she's at home? Can I, connect with friends that I haven't spoken to? And the entire concept of this social media at the time was built around who you knew. And I think this quickly evolved, right? We saw Twitter come out with their feed where you saw content from a lot of different people, from suggested posts to suggested people to follow. You had YouTube go to videos you may be interested in. And then you had Facebook go from what was the chronological feed to the algorithmic feed. And at this point, the world kind of shifted from the important thing is who you know to the important thing is what you want to see. So I think in, the former iteration of social media, who always came before what. And then after that, it was what came before who. You'd often see somebody's post before you even knew who they were. So the content preceded the follow or, the connection. And I think that was a really pivotal moment because that essentially was the birth or, the popularization of the algorithmic feed, where now these companies decided we actually know what you want better than you. And it's not your friends. It's things that you might be genuinely interested in.
Topics.
Right. And that's been even further exacerbated with short form content, right? Like TikTok, YouTube, Instagram. I would say that if you're looking at these reels or these TikToks, you might go 1,000 plus reels in a row without seeing something from someone you know. You might never see something from someone you know because it no longer matters, right? The way you interact with people you know now is you share the content that you like to the person that you think might like it. And it's entirely based off like what is called the interest graph instead of the social graph. And I think that in a world where a lot of this creation of media continues to just grow exponentially with, AI and a lot of the advancements that are coming around that, it gets to this point where there's too much content and there's too much saturation. And you get to a point where everything you see is something that you like. And then at some point it loses its value. It's no longer the thing that you once enjoyed. I think the next iteration of what a great social media platform looks like is going to go from, interest graph based to speculation based graph based, which means that you are now actually going to be rewarded for being right instead of creating content people like. In a world where you can commoditize like people's interests and produce content at a massive scale, it's now more important than ever to actually be able to quantify the thing that you can't actually just produce, which is you being correct. So speculation on, making money on a stock, a token, a prediction market, the weather, where interest rates are going. It's all things that I think you can't commoditize, and there's always somebody who has to be right and somebody who has to be wrong. So it's virtually one of the only things in my mind that can't get disrupted away by AI, at least in the short term. Maybe there's a world, 100 years from now, or even like 20 years from now with the pace that AI is going, that a lot of this is irrelevant and, everybody's supported by UBI. But yeah, I think as it currently stands, there's this next iteration of social media that's coming, and it's going to be entirely powered by how often you're right and, how much you're able to capitalize based on that. So I think we see companies, like Robinhood introducing social features. We see a lot bigger of a push into products, even on the traditional equity side, whether it's, eToro, Webull, or, some of the other competitors. And I think that everybody knows that this is something that's going to happen. Yeah. Our take is that it has to happen on chain, where there's no confirmation bias, there's no selection bias, and you get to see everything transparently and make the fully informed decision of, hey, this is the person that has often been right in the speculation graph era.
And is the idea that like there's so much content around us, there's so many topics that are thrown at people. One of the scarce things, one of the scarce resources is like credibility. Right. And credibility, like slash experts, whatever you want to call it, it can come in the form of just like PNL almost. Like that's sort of and we see that today, whether it's Robinhood, whether it's like prediction markets are another form of that. You guys are obviously building for it. Do you think like it sounds, I imagine we're still in the early days, yes. Like it's just getting off the ground. If you fast forward like 5-10 years, do you have any sort of mental visual of like what that looks like? And maybe this is just like a question of what FOMO looks like, but yeah, like what do you think that actually means more concretely? And maybe there's some like crazy examples, some wild stuff, but curious. I'm sure you've thought about it.
Yeah, I think it's very akin to how there's professional athletes, and then there's, gamers who are becoming almost like professional athletes, where, the people who are performing the best and winning, they're risking something, which is their time in order to get better at this game, are becoming more and more popular, in the world of esports. I think that this ends up translating to everything that's speculation based. So instead of it being, LeBron James as the most famous, athlete in the world, it's going to be, GCR V2, who has made $1 billion across every single prediction market, across sports betting, across, crypto trading. And this is going to be a person who is not, just popular online. I think they're going to be an S-tier celebrity in real life. I think you get to this point where, given risk is the only thing that actually cannot be commoditized by AI, it's something where these people are viewed as the truest celebrities, right? Where, let's say 10 years from now, you could actually make an entire movie in 5 seconds and everybody's a creative director. Do you still have movie stars? Do you still have pop stars? If music can be commoditized away by AI, I think you still have athletes, things that are physical in the world. You still have physical artists. You still have things that I think require a little bit more of a creative edge. But I think that in the online realm of things, or, the digital world of things, it's going to be hard for you to actually be an S-tier actor when I can go create an agent that's going to create 100 movies that are going to be 10 times better than the best actors that exist today. And a lot of this is, reinforced learning, right? There's going to be actors that they can emulate pretty quickly. And maybe in a world 5-10 years from now, they can actually even like extrapolate beyond that. I think we have some reason to already believe that AI can do this to some extent. I think Naval talks about this a little bit in his recent podcast, but there's no reason to fully rule out that AI can actually, over the course of some time, reinforce its own learning without priors. So in that world, I think it's going to be very difficult to have any semblance of, what is content that's interesting, or what is something that is, not commoditized. And I think that's where risk is going to be the ultimate signal of status.
And do you think it's just like a matter of time until something like this happens? Do you think sort of like we still need to build out some of the products or companies that will enable that, or is it just some like combination of the two?
Yeah, I think.
Like, how do we get to this sort of end state where we have, maybe like the next Mr. Beast, instead of creating YouTube videos for 10 years until he grows up, maybe he's like a kid that dropped out of college and made money trading, and he has like a platform and it's growing, and he like trades a bunch of different stuff, and that's how he becomes massive. Yeah. Like it kind of sounds like that kid maybe is like maybe he just dropped out of college and started trading or something.
Yeah, it's possible. I think the markets themselves will kind of correct as technology advances. I think a really good example of this actually is Roaring Kitty, right? You think about GME days, he makes a lot of money, almost overnight becomes like this international celebrity of some extent. There's movies about him. He's, being sued by governments. Like, there's so much that comes out of this single act of, I'm going to go onto Reddit, talk about why we want to short squeeze, certain funds and make a lot of money. And you can argue that, in some world where you have 1,000 of those people every day, one of them is bound to become one of the most famous people in the world, right? I think that as a lot of the technology itself advances, there's more and more room for opportunity to demonstrate yourself at risk. And, there's a lot of things that need to go right. There's a lot of things that need to go a certain way. I do inevitably think that regulation does end up slowing down AI's advancement to the extent that, it can, to the extent that like you don't commoditize everything immediately overnight when the technology is available. But yeah, it's an interesting world, and it's the best view we have on what this looks like over the course of time. It's very possible, more than likely, that we're wrong, but it's something that we're, very excited about and interested in kind of contributing to the vision.
Yeah, no, it's an interesting like feature, and I don't know if most people would agree with your thesis, but I think it's one where if it does happen, like the signs, some of the signs will have been there in hindsight. And yeah, the Roaring Kitty stuff. It feels like we haven't seen someone with that same level of like fame or scale since I believe 2020. But yeah, that was the GameStop, like the Reddit Wall Street bets versus the Wall Street hedge funds. Like that was almost a that's probably like the clearest example of this phenomenon.
Yeah, I think another example, which is maybe odd, is probably Michael Saylor, right? He's don't the majority of his interest or people's interest in him is his risk, right? He's taking one of the biggest positions ever on a financial asset. In some days, he's seeing, more up and down than some of the greatest trades of all time. You talk about things like George Soros's $1 billion trade, with the Great British Pound, and there's days where Michael Saylor is down double that, right? Because of the price of Bitcoin.
Or Tom Lee.
Yeah, or Tom Lee. So I think that you're already seeing some of this already, where there's innate interest there. Maybe it's not widespread enough for people to care, but I think that this is more of a proxy of most of the world not yet being interested in financial speculation. If you consider even the biggest apps, they maybe have 25, 30 million monthly users. There's billions of people in the world. And I actually think that one of the floor factors that will express financial speculation is probably going to be something that looks like a prediction market.
FOMO is both a trading app and a social network. Like without the social network aspect, it's unlikely you would have gotten to the point you are at today, but you need all the trading features and a good trading experience at the same time. Is there like a tension between this at all? Like as you continue to build and scale the product, do you think it'll evolve to become like more of a social network? Because obviously the social's been a big part of it, but it still feels really early. Whereas the trading stuff, there's still a ton more stuff you can do, a ton more assets, but it feels like the trading part is arguably, in my opinion, further along, and the social network takes years to really develop and have like true network effects, which again, you guys have done well. I don't know if you would have crossed that chasm into like true social network effects yet.
Yeah, it's something I think that doesn't have quite tension with one another.
Yeah.
If you think about, like, let's take X, for example, you think about how it needs to have good content, written or video, in order for it to actually have social effects. Without the actual underlying thing being good, it's, no more valuable than any other social network that has failed. So I think we view it from a very similar sense, where you need some form of good trades or good forms of speculation and people being profitable for that to actually work. So that means we need the best trading product. We need the best education. We need the best, access of tooling. And then that is the prerequisite for the social product to actually grow. I think that one of the things with a social product is you don't want it to grow too quickly. Virality is actually often a bad thing when you think about how do you grow a sustainable social product. Sarah Tavel actually talks about this quite a lot, where a lot of people think like, hey, you're building this social media platform and, there's a lot of fire ongoing, put more oil on the gas and try to, exponentially grow it. That's actually the wrong thing to do. You actually want to be able to have sustainable growth. Otherwise, things often die as fast as they grow. Right. And you need to understand, the product that supports 100,000 users is very different than the one that supports, 10 million users, right? And if you have the same product essentially through those time periods, it's very likely it'll fail. So you need to be able to build a product that can kind of match the growth, right? There's different kind of preferences and different, game theory optimal things and different ways to actually use a product as it grows from 100 users to 1,000 to 10,000 and beyond. So if you actually think about it from that perspective, which we firmly believe in, time is actually a moat. So the longer you spend doing it, the more you've actually developed a sustainable social network, and it's harder and harder to disrupt. That's why I think, even 2 decades later, Facebook is still one of the biggest social media products in the world, right?
Yeah.
Sure, it looks
Like
a little
Lindy.
bit different. Very, yep.
Yeah. That's actually, I feel like this is actually very contrarian. The idea that social networks, like the longer they're around, the more valuable. Like obviously that's true, but like in a world where a lot of the sort of ethos is like, hey, grow as fast as possible, like raise a lot of money, grow your user base 100, 1,000 times. This is kind of contrarian. Like, why do you believe this?
Yeah.
Yeah.
I think the best example for this is actually something like a blockchain.
Okay.
Can you imagine, today, let's say roughly, small single digit % of the world is interested in crypto and using the blockchain, right? Let's make the number up. Let's say it's 5%. If tomorrow 99% of the world decided I want to use Ethereum mainnet, it wouldn't work. Right? It would be at such a capacity that the product doesn't work, everything breaks, and there's no longer this,
People would hate crypto.
Exactly.
Be like, this doesn't work at all.
And then you lose the one chance to actually prove to the world that this is something that could work. Now, let's say you scale where you add 10% every month, or you add 2x every year. Then you start to build this kind of architecture and product where you can actually, find yourself sustaining these groups of people over the course of time.
You can make sure everyone has a good experience when they're using it.
And that's important, right? Because once you have a bad experience with a new technology,
you don't go back.
It's very hard for you to actually go back. If you churn as a user, it's actually, one of the most difficult things for you to actually reactivate them, no matter what the product looks like in the future. So you need to solve the leaky bucket in those cases before you actually add new users. Yeah. And in our case, we, I think, have done a really good job of creating this network, getting new users, but there's a lot of leaky buckets. There's a lot of things we need to solve. Yeah. And if you told me, hey, we want to, in a world where you add 100 million just tomorrow, are you happy? It's no, the product would die. So it's one of those things where you need to build at such a scale, and products are very different from each evolution of users.
So is this something you guys do very intentionally, where you're like, hey, like maybe we just had a few months where we had like this step function growth or 5x growth or something. Let's like, do you like spend less money or time on like user acquisition for the next few months while the product catches up and maybe it gets ahead? Like, is that an intentional thing you guys do, or is it just something you like think about?
It's something we think about, and I think it roots a lot of the decisions we make towards growth and growth spend. Yeah. So today, if I had to estimate, we probably spend less than a quarter of a day's revenue on growth monthly. So it's something that's very, very contained, very small. And truthfully, if you told me 10x the budget tomorrow, we wouldn't really know where to start. Yeah. So I think it's one of those things where, our philosophy is the product needs to grow. And with that product growth comes, user growth. Otherwise, it's not sustainable. And it's something that creates a lot more issues than we can kind of handle. Right. So I think a lot of this is like, naturally led up to the market. And that's something that we're very comfortable with.
And if that growth happens, you're not going to say like, you're not going to be like, guys, like slow down, like don't use the product. Yeah.
I think at that point you shift priorities, right? Now it goes from, hey, let's stop building this new feature. Let's scale up.
Let's catch up.
Exactly.
Yeah. So
exactly.
It's like, it kind of reminds me of like Coinbase. Like they're the company where in 2017 and 2020 at different times, like the website literally would stop working.
Yeah.
Like you would try to place trades and it would stop working. And Coinbase has done really well and they've survived, but like getting like they experienced a ton of growth in those points, but frankly, it was they kind of like lost people as well. Like when big traders couldn't use the platform, when literally the trades were not going through. Right. Like that's not a good experience. And again, if that happens to you guys, like it'll be a good thing, right? It means that people are coming, but at the same time, you never want anyone to sort of have that user experience. So.
Exactly. Yep. That's exactly how we feel about it.
You guys obviously started with Memecoins and tokens as the initial wedge. Most of the people downloading and using the app are coming because you guys provide this 10x better experience for trading Solana meme coins or Base or BNB or whatever. Like, what are your thoughts overall on meme coins as a category?
Yeah, so I actually think meme coins and adjacent are actually a few years still too early. I think that generally most coins in crypto are meme coins, whether, people want to attach a picture of a dog to it or, an L1 blockchain that doesn't actually accrue value. A lot of, things are mimetic. And one of FOMO's top traders, Remus, actually posted this graphic today, which is like there's meme coin, this much mimetic, and then fundamental coins, this much mimetic, this much fundamental, right? Like the difference actually is not that broad. And I think that same thing generally applies for every asset in the world, right? Whether it's an Nvidia or whether it's an S&P 500, like a lot of the actual price up and down is not so much fundamental based, but kind of almost mimetic in a way. Otherwise, markets will be perfectly efficient, right? There's an earnings call, people report, 10% of earnings, token market or the stock should go up 10%. That rarely happens. I think that a lot of this is mimetic value, and it's something that is very widely kind of just accepted in the traditional world, but it's less so in the crypto world where people are always trying to think about, what is this coin really worth or what does this really do? And I think that's a reasonable question, but I actually think that over the course of the next few years, either prediction markets or meme coins will be the way people express views on everything, whether that's as simple as, am I long this creator or this cultural trend or, this industry? And I think that when you have a free market where people can express their views and it is truly fair and widely visible, it's going to be a place where people can express whatever views they have. And it really itches into the human psychology of like everybody thinking they're better than the average person in anything, whether it's speculating or whether it's doing something. So I think that this is a market that actually expands by many, many orders of magnitude over the course of the next few years. And there will be a platform that has to house all these people who are interested.
And are there specific categories of meme coins or tokens that you're most excited about? Because we've seen a lot of different iterations, right? Like before Solana launched, like there were meme coins, they were on like Bitcoin, they were on Ethereum, they were their own chains. Solana's obviously been the main place, and you guys started, and I assume most of the activity is still on Solana today for you guys. Um, like we'll see what the future holds. Like there might be other chains, other form factors. It might be creator coins, which up till now have gotten a ton of hate. Like it hasn't really worked, but maybe in the future. Like how do you think about? Do you have an opinion on like these different categories, like how it might evolve? Because I think the flavor changes. Like again, NFTs are another example.
Yeah, definitely. I think people often make the NFT to meme coin comparison. I think the fungibility is really important to distinguish there, where one is a bad form of speculation and the other is the ultimate form of speculation. I think that the meme coins I speak about in the future are less so like a made up character or a cult that appeals to, 10,000 people at most in the world. Yeah. And it's something that actually embodies something much larger. I think you take the biggest pieces of culture, you can probably directly map it one to one to like, what do people Google the most? What are the people the most interested in seeing or hearing about? And those actually end up becoming the things that embody most of the meme coins. I think like, take for example, let's say AI, right? I think that today, maybe 10% of the world uses AI to some form. I think everybody who uses AI is very long, right? They think, it's not clear what the ceiling is, but it's something that'll continue to grow, that'll improve every quarter. But most of the world doesn't think that. So what if there was a meme coin that was just objectively the canonical AI? And we could all put money in saying, I think that AI is going to grow by 100x, right? Today, you would have to go express a specific view. I'm going to have to go buy NVIDIA. I have to go buy secondaries of OpenAI. I can't just buy AI. I think that ends up becoming, the largest form of speculation. Yeah. And the things that people are generally most interested in, whether it's by quantity or by number of people, right, is going to be something that actually fuels this like next, generation of what a meme coin is.
And if we use like that, like let's just say the AI example, I think one of the critiques that meme coins have had, and one of the flaws, frankly, is the creation aspect, right? Which is tons of MEV, tons of sniping, like people accumulating huge amounts of supply of a token and then like doing like dumping it or sniping it or whatever. I think that's gotten better over time, but I'm assuming there's still like a long way to go, frankly. What are your thoughts on the overall like market structure of meme coins today in terms of like creation and like issuance and like early days?
I think it actually has gotten far worse over the course of the last few years. Yeah. I think a lot of this is just that it's so easy to launch a coin, and there's somebody who takes a cut at every level, whether it's the bonding level, whether it's the graduation level, whether it's the AMM level, whether it's the terminal level, whether it's, whatever it is. There's so many layers of people losing money, and I think that that's actually not bad for the industry. I think you have to get to this point where there is somehow, I don't know how, an asset that people view to be the canonical representation of whatever the underlying is.
Yeah.
There's no fees that are taken out around the expression of that view, or very minimal fees at the very most. And then that is something that people can actually speculate and benefit from, or, lose money from as a result of their form of speculation. So yeah, it's a tricky problem. I know it's something that a lot of traders really have gripes with, where maybe they are really excited and think that, hey, 6-7 is not something that has caught on, globally, so I'm going to go buy the token. They come back 2 months when it's at all-time high of cultural relevancy, and the token's at zero, and there's this other 6-7 that was launched by somebody else. And I think that in that world, it's very hard to continue to see how this game sustains. Right. I think there needs to be a way people can identify the canonical version of each underlying thing. Sure. And that's honestly like one of the most important problems to solve, I think, for the on-chain industry.
Do you think could not agree more. Do you think that's like a platform-led thing? Like, hey, there needs to be a platform with like enough credibility and reach and, frankly, trust, where maybe the platform can like issue these like canonical forms themselves, and it's still transferable and other platforms can trade it or something. Like, I kind of feel like there needs to be like a canonical issuer, which kind of goes against a lot of the ethos. Like, the whole point is that like, hey, anyone can create a token for like themselves or whatever. But like, I don't know how else you would solve that other than having some like neutral party that doesn't take this like enormous cut or whatever issue like that.
I think it has to be fully transparent, and it might even have to be automated. It might have to be like agentic, right? It might have to be that there is a platform or a chain that anything that is relevant, it just has a token available. Sure. So that when you go to buy the thing, it already exists. It doesn't need to be created. It doesn't need to, be something that you need to like distribute the supply of. You don't need to do all these things. Yeah. I think that it's just something that needs to exist, and you can go long or short, and it's something that you can express a view on, right, without having, the biases. I think the thing you have to solve for then is who's incentivized to spread the goodwill, who's incentivized to bag work, who's incentivized to be part of the team. So that's a kind of a different set of expectations of how do you then turn this, coin that was launched by an agent, and give it enough supply to discern who the credible people that are contributing value to this coin are. And I think that's a tricky thing to solve, but in some ways, it almost feels like it has to be solved by something entirely neutral, right?
Worry you at all the fact that like the meme coin market, because it is so sort of there's so many issues today, and again, it's not an impossible problem to solve or anything, but like a lot of users don't have that good experience, and you guys are the front end, right? Like, you don't touch the token creation process. I know there's like a filtering process that you guys have, where you're like accounting for like MEV and sniping and things like that. But is that something that worries you at all?
Yeah, I think it's a problem with no solution at the moment. And I think that is an issue, because once people deem games to be unfair, they stop playing them. Right. It's kind of akin to like the HFT wars, right? Where maybe you felt like you were able to have some sort of arbitrage, and then, Tower or Jane Street comes in, and now it feels like a rigged game because you can never win. So you just completely stop playing. I think that's a really bad outcome, and it's something that the industry at large should try to avoid, where you want people expressing their views on chain, because if they don't do it on chain, they'll do it somewhere else. And you should prefer that it's somewhere completely visible and transparent rather than a black box. I think the world has headed in that direction, and there's probably a lot of growing pains, a lot of frictions, and a lot of unknown unknowns. But in this kind of ideal view of what financial speculation in the world around it looks like, that's the only way that it can actually kind of sustainably live.
While we're riffing on this, it kind of feels like there needs to be like a industry-wide like effort to create standards for meme coin issuance, and sort of, it could be like automated agentic style. But I mean, we've had these like efforts before with like stable coins and like security and audits, where there's like industry standards that improve everyone's lives. it kind of feels like something like that for meme coin creation, graduation, like on-chain fundraising in general. Like it might be could be useful.
Yeah, it's unclear. It's honestly like a very
It's a hard problem.
hard problem to solve. And I think a lot of the solutions that people have proposed probably have tensions with like the ethos of crypto.
Sure.
So there are always things to balance, but I tend to think that in a world where there's a clearly, optimal way of doing something, the centralization matters a lot less as long as it's transparent.
Yeah.
You can think about stablecoins as an example there, right? Like USDT, USDC, they hold all of your money in banks, in treasury bills. Like that's something that there is a centralized entity, but nobody, claims that USDC and USDT and stablecoins are, the bane of crypto or that they make crypto worse.
Yeah.
In fact,
Some people do, but
I'm sure some people do,
some
but the
people
large
do.
majority benefit from it to such an extent where it's accepted. And now you're seeing more and more of these corporations begin to build on chain, which I don't think is, necessarily one-to-one, but it's directionally similar. And I'm sure people will continue to use the product. So to some extent, maybe that is a solution, but it's really hard to tell, especially as you weigh all the different, parts of crypto and its ethos.
Are there any teams or companies that you have like gained a lot of inspiration from as you're building and scaling FOMO that you sort of, just like use as examples of maybe you borrow certain things?
I think there's a lot of great companies, especially through the course of time that, we take bits and pieces from.
Yeah.
I think that one that is crypto specific is probably Hyperliquid. Hyperliquid is one of those teams that I think most people respect, and for good reason. I think they've built something that solved the problem at a right time, did it in a way that was very transparent, and has really earned the trust of a lot of people. And when you're building an app where it's still somewhat decentralizing, it's important to have the trust of people, right? They need to understand that, hey, you're doing the things better than, whoever came before you and the people that you're trying to solve the issues of. So they're a team that I think has done a really good job of balancing pretty much their entire organization and have largely been product-led growth, right? Yeah. At some size, you do have to start doing some of the things that require real growth. They're starting to do that, but there's this kind of tempo and progression in which they do it that I think is very respectable. Yeah. And the broader vision is something that I think will ultimately touch a lot of different lives and change people's view of how they interact with finance. So that's something that is always not good for the world. And I think they're a team that people just generally trust to do the right thing. So high integrity is something that's really, really important for us at FOMO. And I hope that that's something more and more teams view to be one of the more important things going forward.
That's a really obviously great example. And it's easy to, now that Hyperliquid is huge, it's easy to like ascribe reasons they succeeded. But I think the product-led growth is the big one. And the reason it's like, I would agree, the reason a lot it's sustained this goodwill is because of intentional actions the Hyperliquid team has done. Like having really generous airdrops when they're able to sell from the team unlocks, not selling as much, like nowhere near as much as they could. Like Jeff, not selling like hype that we know of at least. So, and just seeming to be a high integrity team in general. And I definitely can see like, hey, in tokens and meme coins where, without naming names, like there's been a lot of sort of bad behavior. Just the simple fact of like, hey, being a team that is not going to do these shady things, is going to try to do things the right way. Like first and foremost, building for users. Like there's still money to me, right? Like you can build a massive company, but it's sort of taking the long view.
Definitely.
Yeah. So with that note, thank you for taking the time today. And it was a pleasure.
Thanks, Eric. It was a pleasure.